8,000 levels broadly during demon to about 11,200. So if we correct for 3, 4, 5 months, it's not a very big deal. I'll just explain you how we've played the last 5 years. We've played the last 5 years like a cricket match, a 50 over match. So the first 20 overs of the match where you have fielding restrictions, that's where you can go and hit your fours and your sixes, and that's what we did in 2013 and 14. We were chasing multi-baggers. Then it was between the 20th over and the 40th over where you normally take singles and doubles, and that's exactly what we did. We were chasing compounding stories. And the last 1 year, that was the year between 2015 and 16, and then the last 1 year was just a melt up stage, and that was like the 40th to 50th over of the cricket match where you just go pinch hitting. We went lower on quality, and we just wanted to maximize our returns. Now that stage is gone. So from December we've been selling our portfolio. We're currently on 12% cash. So right now we have cut down a lot of junk or low quality stocks out of our portfolio. Now we're just betting on high quality. We're looking at see, there is always a bull market. So between 2009 and 2014 the markets did nothing, but pharma, consumer, FMCG, those stocks created a lot of wealth. So there will be a sector that will lead the next phase of the bull market, and we will come to know that in the next 3-4 months.
Sure. Tell me what, say for indicative purposes, I'm saying Nifty, of course broader markets could be more. If this correction over the next 5 months is set to materialize, how much more downside do you see in the Nifty for indicative purpose, or even the mid cap index?
So for me, we have decided levels. A 10,300 is the best case scenario, which we've already hit in. Once 10,300 is broken, we should hit towards 9,700. That's broadly the next support level. And I believe there's an 80% chance that that support would hold. If that is also gone, then we have 9,100. And if 9,100 is gone, then the bull market is over. That's what we think. But see, the risk will come not from India alone, it will also come from the US market. Yields are rising. Yields are now around 3%. So as your yields keep rising, your valuations keep going down. So that's one risk. So see, we are already at a valuation top, not in India but globally. So the maximum amount of money that we can make is just earnings growth, and just pray that the valuations don't come down. So if I buy a stock which is at 25p or 30p, I can't expect the P re-rating to happen. It is all going to be like maximum returns equals to growth rate. That's how we're looking at it. And we're looking at stocks that will have like a Lollapalooza growth for the next 3-4 years, so that even if we buy it expensive, we can still end up making money.
A quick technical check at this time is important. Rajesh Palvia is here. Rajesh, what is your medium term call on the Nifty and Bank Nifty? I just want to marry what the technicals are saying with the fundamental picture with my friend, which was painting for us. In the more medium term nature, how do you see the Nifty Bank Nifty pan out? And also what stocks you have for our viewers from the more short term trade point of view?
See, if we look at the medium-term view for the Nifty, as we have already, touched the level of 11,000, that would be, again, likely to act as a major hurdle for any kind of, up move if we see in the near-term basis. So 10,000 is the first, major important support. If we taken out, 10,300 or 400 level, which is again, for near-term trading perspective, 10,300, 400 is very important level. If we taken out these level, then 10,000 and then 9,700 followed by 9,700. This could be the next major level on the downside. Higher side 10,800 and 11,000 is likely to act as a major hurdle for any kind of up move if we see in the next 1 or 2 month kind of time frame. If we taken out 11,000 level, then only we'll see the fresh buying action or fresh sector momentum or fresh new high in the market. So 11,000 to 10,000 is my guess for the next 2-3 month time frame. If you look at the bank nifty per se, the bank nifty is struggling at the higher level. So 25,800, 26,200 is likely to act as a major hurdle for any up move in the next 1 or 2 month kind of time frame. Lower side, I feel we'll see further more crack in the bank nifty in the coming months, and lower side I expect that it may move towards 24,200 to even it may break 24,200 important support level and can go down for the level of 23,800 or 23,500 level. So broadly, if we look at the range, it could be 24,000 to 25,800 could be the possible range we can witness in next 1 month to 2 month kind of time frame for the bank nifty.
And what about your trading ideas?
Yeah, I have one buy idea on the automobile play. If you look at the Ashok Leyland, the structure of Ashok Leyland is looking very attractive. And if you look at the last 1 month move, a lot of buying action was seen in the stock, and it has accumulated in the range of 120 to 130. And now it's trading about to its weekly breakout level of 135. So I feel that Ashok Leyland is likely to perform on the higher side, and we can expect a target of 148 on the higher side. So for trading point of view, one can keep stop loss of 134. On the higher side, I'm expecting target of 148 to 155 in coming trading session. And another interesting peak is on from the pharma space, which is Vocard Pharma. If you look at the structure of Vocard Pharma, since last 4-5 trading session, stock is getting buying traction at the lower level, and on the near term chart, it has managed to give the breakout. So I feel that Vocard Pharma is likely to perform on the bullish side, and we can expect target of 845 to 860 in the coming trading session. One can keep a stop loss of 805 for their trading position in the Vogue Pharma.
Right. Right. Rajesh, thank you very much for your time. Amit, now I know broadly the construction of your portfolio. You have roads, you have infrastructure players as well as the metals. Uh, which are the areas where you are paring down and raising cash? One. And what's in your mind at your portfolio level? To what level would you raise your cash levels in the next 6 months?
So we've cut down weight on financials substantially. So that's one space that we are cutting down weight. That's the only place basically. We've basically gone down on the low quality stock. So I'll just disclose, like, we were holding Diwan Housing. We got it at one time price to book, so we've cut down weight there a little bit yesterday. That's where we've cut down weight. But where are we raising? So we've been buying as well. It's not that we've not been buying at all. See, infrastructure. So what do we look for? We look for when a whole sector will grow at 30-40% for next 12 quarters. If you can get that right, there is 100% guarantee that you will make money. And over long term, markets are related to earnings growth. So let's just take an example of road infrastructure. Now, last time I was there, I've already spoken about Maharatmala. Everyone knows about it. I'll just give you micro level details. Dilip Bilcon will grow this year at 50%. Next year broadly should grow at 30-40%. PNC infrastructure should grow at 50 odd percent next year. Wellspin will grow at 100% next year, and this year it will grow at, it's already like FY18 it will grow at 300%, and next year it will grow at 100%. So KNR broadly 30%. So basically the high quality road construction company basket the entire pack will grow at 50%, 40-50% broadly next year. So once you have that kind of earnings growth, and it's pretty visible, right? So once you have visibility of earnings growth for 12-13 quarters, you just go and bet big, and that's what we're doing. So they will not rise when markets are falling, but they will not fall a lot. But once the market starts rising a little bit, they will be like basically the first ones to go out and like make a lot of money for us. So road construction is definitely one space that you should look for.
And what are your thoughts on earnings as a whole? Because though you are making a case that there's a technical correction at play after a very hefty rally last 2-3 years, and globally too, things are indicating at a possible downturn. But don't you think if the earnings are really catch up the way people are thinking and making their Excel sheets for? Do you think that this downside could be cushioned, and perhaps the stocks which have actually are likely to show up good earnings are the ones which will rebound much more?
Absolutely, absolutely. This is once, so this is not a full blown bear market at all. This is just an intermediate top. This the small caps and mid caps will correct. So they were at 40p. They'll probably come to 20, 25p, and that's when you start looking at this again. We are in a very larger bull market. Earnings growth is going to be strong next quarter. Like this quarter was already an awesome quarter. Next quarter onwards, the earnings growth will be very large. So you need to look at very large earning deltas. Like example, I'll just give you metals, a space that you've been like I've been very bullish on, like steel cycle. Okay, the last time I came, I said that out of the 10 steel companies, you had 6 steel companies where promoters themselves are buying shares, and that's when we went up and bought the steel cycle. Now the prices of steel in October 2017, that is 6 months back, was 34,000. Today the price of steel is 44,000. Now their cost has not gone up because these are all integrated players. So the earnings will go up 100-200% there as well, and that's where real wealth will be created. So we are looking at accelerated earnings growth for the next few quarters in the steel cycle. Steel cycle looks very beautiful to me. It's a perfect cycle, and I'm pretty sure that we'll make a lot of money there.
Right. And what about from the large cap space? If say the Nifty basket for that matter, if the full blown correction comes in, any areas which look good?
We don't track large caps so closely, but automobiles, no. So see, IT is a global rally. So IT might broadly do okay, because see, the leader of this is a global bull market, and the leader of this global bull market are the FANG stocks: Facebook, Amazon, Google. Those companies are growing at 30, 40%, and they're creating immense amount of wealth. If you see, Ajay, globally, the trends are similar. 2003 to 2007 was not an Indian real estate trend, but a global real estate trend. Now, like 2014 onwards, it's a global IT trend. So companies like Alibaba are up 4x, Tencent in China is up 4x in the last 3-4 years. These Google, Facebook, so it's a global trend, and so Indian IT will also follow that trend somewhat. But the problem is that there is no accelerated earnings growth. So like you can play for the 20-30% returns, but we don't do that. So we look at stocks which can go up 2, 3, 4x, but we don't find that in IT companies. We need growth. Growth creates wealth. That's where value is, and that's worked for us.
G for growth and G for greed. Amit, I know that. Gordon Gecko said greed is good, and you follow him very closely. 20-30% is not enough for you. But wonderful chatting with you, like always. And we shall connect once again offline. Time for a very short break.